Well, that is the big decision from overnight. You're with us here on a fresh new edition of Bazaar Morning Call, coming to you live from the CNBC-TV18 News studios. And things are looking up, chin up, as they say. I'm Prashant, with me, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi,
morning.
Good morning. What are we calling this? The Santa Claus rally, the year-end rally, the pre-election rally, whatever it is, it looks like it's going to be a strong one. And this is something that the street was, sort of getting ready for, all set for takeoff. And now perhaps it's going to happen.
Well, Santa is coming to town, right, Sonia? And the ingredients were there. You had Rudolph, you had Frosty the Snowman, everyone was ready. And now they've delivered. So I think, that Santa Claus rally is well and truly on. And we're bracing for a terrific Thursday, I think so.
Santa's picture on screen is looking a little angry, no? I mean, Powell.
He made the markets happy, though.
We'll change that. We'll have a happier mugshot there with...
Actually, he does look very similar to what Santa would perhaps look like, right? So for bulls, I don't think that's such a... I mean, of course, he's not smiling at the moment, but if he was, then...
I think we can manage a smiling picture, right? We'll do that. Well, it's looking good, and it's completely dramatically different in terms of a Fed outcome. So it's a pretty big day in that sense. So this is what you need to know as we begin another session. We have the US Fed, which I would say sounded extraordinarily dovish. We've not had them sound so dovish and so, in a way, clear-eyed about what they want to do. So they've ended this year, and this is the last decision of the year 2023. They've ended with a dovish bang, I would say. Why is that? Fed dots show 3 cuts next year. This is Fed and Fed members, and they all come in with their own forecasts. It shows 3 cuts next year. From current 5.1% rates, rates are expected to go down about 75 basis points. 3 cuts, 25 each, all the way down to about 4.6% or so. This is Fed's own estimation. I think, as someone said, this is the Fed taking a step towards the market rather than the market kind of trying to overreach and push the Fed to do it. The Fed itself is now starting to move. Now, Powell essentially said that rate cuts were discussed in this meeting and that they are, in his words, coming into view. I mean, if you had to kind of parse through the entire statement of the post-statement Q&A, etc., I think that one phrase, that rate cuts are now coming into view, was an explicit admission that the Fed is actually starting to look at this very clearly. Markets themselves, I mean, the Fed is saying 75 basis points between now and next year. Market itself, of course, is much ahead. Markets are pricing in 140 basis points of rate cuts for 2024. I mean, that did not move very much even after what the Fed did. And what this does is, if you go through most sort of sell-side global reports, etc., most are saying the first cut perhaps will be in June, July, etc. But what we've heard, it kind of makes the meeting in March and the meeting in May also alive. I mean, you've got to be alive for a potential cut much before what markets were waiting out for. Now, we had markets which rallied and they made new, fresh year-to-date highs. I'm talking about U.S. markets. S&P was up 1.3, NASDAQ was up about 1.4, and you got the broader small-cap index, which ended up almost 4% higher. We have very sharp pullback in yields. The 10-year, the most closely watched, sold off 18 basis points to 4%. I mean, we were at 4.1 and we were kind of saying what a big fall it is. And then the yields moved up about 10 basis points. And in one single session, we are now knocking at the 4% level. So it'll be 3 point something with some help over the next couple of days. And that's remarkable. Dollar index, that fell across the board. The index itself 1% lower. That's a large one. 102.91 is where that finally ended at. Nifty, just to circle all of this back to levels, Nifty yesterday broke. It looked a little iffy, right? I mean, over the last couple of days, and we've been talking about the loss of momentum, actually starting last week. But yesterday, it broke, this 20,850 supports intraday, but it actually closed above it. So there was a nice pullback which materialized, and the market did quite okay. The low of, 20,769 becomes important in that sense. This is the recent low. And if that does not break, I mean, you basically are looking at higher levels. I think, this much-needed ammunition is, of course, what we've got from the Fed. So can that spur us above the recent highs all to, back to kind of looking at newer highs every day? It is possible. Nifty needs to take out, as I said, the recent high of 21,037. Bank Nifty, that yesterday ended absolutely flat, but it did not break below the hourly average. There, The recent high is 47,588. So instead of starting with supports, I'm starting with levels on the upside, and 47.58 is the recent high, which needs to be taken out. Supports, the very near-term supports come in about 100 points away from where we left off, which is 46,907. So that's essentially the setup overall. The GIFT Nifty will come up on your screen. I think, you got clear areas of activity. IT, for example, bond yields have cracked, in a very significant way. So IT is one. Dollar index has sold off in a large way. Metals and mining stocks have looked good over the last couple of days. Yesterday was a big day for metals. And I think those are pockets which perhaps should see incremental action. The leader, of course, has been the PSU space. And I think action there continues in an unabated way. Sonia.
Absolutely. And the US Fed decision is a macro trigger for the market, right? Yeah. Just like we had the election results, and you saw the kind of up move that the market saw. So in that context, this is going to be a big, big day for the market. But let's not forget the Nifty has already put a rally in place. The Nifty is up about 6.5% in the last 1 month. But there are a couple of things that are playing out now. This is the year-end rally. This could be the pre-budget rally as well. And a pre-election rally perhaps is likely from here on. Because now, with the US talking about 3 rate cuts, all eyes will be on the RBI and what the next move of the RBI will be, when the rate cuts would come in our own markets, and the street will start to factor that in. So my advice is don't be in a hurry to book profits. This is a rally that is here to stay. The Nifty uptrend is very much intact. Now, banks are likely to lead the rally largely because we've been telling you about how, rate sensitives have been moving very well. Banks, real estate. The real estate index yesterday hit a record high as well. And if FIIs join in, then IT could also participate because you saw some short covering in the IT index yesterday. So perhaps that's another, area to look at. After the CPI data, the IT index as well could participate. FIIs bought 4,700 crores in the cash markets yesterday. Now the important part to see is FIIs start to participate in a big way. PSU banks, overall the Bank Nifty as well as the IT index. So we have leadership from a lot of pockets. Now, there are a couple of things that we, of course, need to watch out for in terms of cues. But the big trigger is this, as we've been saying, and we'll, of course, get a lot of market participants in as well. Now, with the Fed talking about 3 rate cuts, all eyes will now be on the RBI. There is a pre-budget rally that could be likely as well. So don't be in a hurry to book profits.
Well, you need to ride this wave, right? And in fact, the fear is of getting out early. Yeah. Even if you got out post the election day, well, you'll be, not too happy with the kind of decision you have made. And brace for a terrific Thursday, I think so, because the Fed has delivered, and it pretty much appears that that Santa Claus rally that we normally talk about, that's well and truly on. The domestic queue in terms of the political instability, well, that's behind us because 2024, there'll be continuity. The Fed has delivered a dovish stance, which is good. And crude oil prices have corrected from around those highs just a month or so ago of around $90. It's down to around $75 per barrel. And the dollar index as well is lower. US yields as well is lower. So ingredients are for a very, very good Thursday. Now, yesterday, it seems some part of the street, they sniffed that maybe you're going to get a dovish Q coming in from the Fed. Because the Nifty and the Nifty Bank, if you pull up the intraday chart, there was a big recovery from the low point of the day. On the Nifty itself, there was a 150-point recovery from the day's low. And the Nifty Bank had an element of expiry as well. Talking about expiry, the Nifty plays out its weekly expiry today. And there is writing that was seen at around the 21,000 call, the 21,100 call as well. And that indicates that maybe positioning is such that, that 20,050 was likely to be defended. That is what the market is positioned for. However, with the kind of rally we're likely to see and the kind of opening we're likely to see, building on from there and holding on to those levels is going to be very, very crucial. So let's get the levels up for you on the screen. The Nifty support, well, it comes in at around the 20,700 to around 20,850. That's the level we mentioned yesterday as well. And yesterday's low is 20,770. So that's pat in the middle of both those two. Resistance comes in, going by the options data, at 21,040 and 21,130. If we can breach those levels, well, then we are in for a very, very big day. The dollar index, well, that's cooled off a little bit, as well as the US 10-year yields as well have cooled off. So that's good news. I'm looking at 2 sectors, actually, that will be in focus. One is the metal index, because the dollar index has cooled off, and the IT index, because, the yields have cooled off as well. So that's pretty good news. And before we wind down, just pull up what the FI positioning in the index futures. Well, currently 58% of their positions are on the long side, while on the short side, you have close to around 42%. GIFT Nifty suggests a 200-point gap up. I think maybe it'll be, welcome with some kind of selling, but you need to stay long in this market and trail your stop losses. this market is in for a fantastic close to 2023.
Okay, and what a great run, right? We have just 15 days left for the year to end, and what a year it's been for the markets and for all bulls in this market. So big opening lined up ahead, and we have so much commentary coming in for you. So let's start off very quickly with Eric Fishwick of CLSA, who says the Fed has left rates unchanged, which was a given, and the guidance for rates in 2024 was the main focus. He interprets the guidance as dovish and adds that the median Fed funds forecast for end 2024 has been cut from 5.1% to 4.6%. That is 3 cuts in September, November and December.
Okay, so money market views now on Parul Mithelson of Standard Chartered says that the rupee continued to trade in a narrow range during the week despite good equity flows, lower oil prices and a weaker dollar post Dovish Fed commentary. She expects the dollar-rupee pair to be between 83.25 and 83.45 to the dollar, with next week with markets closely watching other global central bank outcomes during the course of the week.
All right, and on the bonds, Parul says domestic bonds traded in a narrow range driven by tight interbank liquidity and increased supply of Indian government bonds and state development loans, even as the global yields have declined, post an unambiguously dovish Fed commentary and an inline US CPI print. In India, the RBI MPC maintained status quo on repo rate, and the stance and the statement, according to them, was well balanced.
Well, we have a lot of stock-specific action to track for you. We'll get to that in just a bit. For the time being, we'll run you through the list.